one of the important basic fundamental things that you need to know for every single chapter in this class, and actually for any accounting class that you take. You need to understand the different types of accounts. And in accounting, there are 5 types of accounts. And within each type of an account, there are several specific accounts. So I thought we'd just take a few minutes and review these 5 types of accounts and go through examples of each of the accounts within each type. So the first type of an account is an asset. An asset is defined as something of value controlled by the company. So just think of that when you're trying to determine, is this an asset or is it not an asset? Go back to the definition. Is it something of value that the company controls? Examples of assets are cash, accounts receivable, notes receivable, supplies, any type of a prepaid rent, prepaid insurance, prepaid advertising, buildings, land, equipment. You get the idea. Second type of an account is a liability. And a liability is simply a debt of the business. Very simple. If the company owes something, doesn't have to be money, but if they have some debt, then it is categorized as a liability. Examples of liabilities that we will encounter in this class is accounts payable, notes payable, salaries payable, rent payable. Unearned revenue is also a liability. Unearned revenue is where we actually owe some service, typically, rather than actually owing money. So those are liabilities. The third type of an account is owner's equity. Owner's equity is the owner's interest in the assets after deducting the liabilities. So it's kind of like owners get what's left over. That's what they own. That's the part of the business that they own. And depending on the structure of the company, the owner's equity could have slightly different names. But for the purpose of this class, we're always going to call owner's equity capital. And typically the way we do that is we have the owner's name in front of capital. So in the example I have here, I have KID Capital. If I was the owner, my owner's equity would be called KID Capital. A second type of owner's equity account is called withdrawals. Withdrawals is kind of the opposite of capital. Withdrawals is where the owner takes money out of the business or takes ownership away from the business. So withdrawals is an owner's equity account, but is actually called a contra account because it has the opposite effect. It reduces the ownership in the business. A fourth type of an account is revenues. And revenues is defined as a gross increase in equity from a company's business activities. And typical names that we will use for revenue would be sales, fees earned, commissions earned, interest revenue, etc. And then the fifth and last type of an account is an expense. An expense is defined as an outflow or using up of assets as part of operations of business to generate revenue. That's why we incur an expense, is to generate revenue. That's the whole purpose of it. So again, go back to this definition. When you have trouble identifying what kind of an account something is, go back to these definitions. Examples of expenses that we're going to encounter will be like salaries expense, supply expense, rent expense, utility expense, insurance expense. You get the idea. You know if it ends in an expense, it's an expense, right?